Well, good morning, everyone. Welcome to our Wednesday morning open house. I'm glad you took the time to join us. My name is Eric Senft. I'm going to be your host for the next hour and a half or so. Just a moment while I get you my monitor. Okay, everything should be up and running. Of course, holiday week in the US. Today is actually a stat holiday in Canada, so the markets could be getting a little bit thinner as we get toward the weekend. Tomorrow should be, well, especially the afternoon session tomorrow should be very, very thin. For those of you new to the trading room, let me give you a real quick tour. What you're looking at here, this is the diversified trading system. And it's diversified because we're looking at the market from three different points of view. We're not simply saying, oh, here's a 5-minute chart for short term, here's a 15-minute chart for midterm, and a hourly chart for long term, or something like that. This is three separate tools. Here on the top left, we have the Hawk Scalper. Top right is the Falcon Swing Trader. Bottom left is the Eagle Trend Trader, and the bottom right is the latest addition to the DTS tool assortment. This is the Raptor. The Raptor actually incorporates elements of the other three tools. The charts you're looking at here are the NASDAQ, and I've also got soybeans and crude oil on my other chart, but I would be happy to take a look at any market which is of interest to you. I'm sure there's probably some currency traders in our group and maybe e-mini traders, so feel free to ask if there is something that you would like to see. Okay, let's take a look here. Let's see where we've been, where we're going. Here's the overnight. Of course, yesterday a little bit more subdued. This is the Eagle Trend Trader. The yesterday session a little choppier compared to what was going on the day before when the NQ fell right out of bed. Today's session, we had the overnight. Here's the London Open. We actually got a buy signal off of the soft edge. This is a soft edge bounce. You'll notice that all signals develop the same way on these tools. We get a warning dot along with an audio alert. And when the signal is complete, we get a triangle and a hash mark. So right now I just got a trend warning dot and a trend audio alert. So you can see we've got the warning dot here. The signal is not complete. This might work itself into a red bar buy off of the hard edge. That's a very strong buy signal. We'll see. This tool that you see here in the top left corner, this is called the Trade Forecaster. And this is what we call a system add-on. Actually, all these features that you're going to see today, you can purchase individually. And there's the link for that if you'd like to find out more information about the Trade Forecaster. All right, so the NQ still sorting itself out a little bit. It's just the opening minutes, not to get too excited just yet. Okay, I got a request for the 30-year bond from Terry. And Don is asking, can you take a look at crude oil? Absolutely. It looks like we're going a little bit sideways here for the moment, so we'll just let the dust settle. And why don't we take a look at crude? Today, inventory day for crude, of course. That would be at 7:30 my time. That's Pacific, 10:30 Eastern. So we'll keep a lookout on that. Here's crude oil on the Eagle. You can see Trade Forecaster says we're coming out of trending mode and going to be moving into swing mode. So we'll see how long that lasts. We had actually a green bar sell back here during the overnight session. Off of the North American Open, we had a hard edge bounce with another sell. These are all signals that we tend to look for. These are our high probability signals. When I say a green bar sell, I'm referring to this formation right here. This is a red bar buy. They're easy to spot because they occur on the hard edge. Whenever the market encounters the hard edge of this trading band, we expect a reaction. And this trading band gives us our directional bias. So a couple opportunities, well, in the overnight, or actually I guess that was yesterday's session for crude oil. And here was a sell. Have we hit our high probability target yet? I think we're probably there. Yeah, so we just hit our high probability profit objective on crude oil. Very often, because crude is so volatile, I will double the profit target, try to get a little bit more out of that. But we did have a decent signal there. Don't be surprised if crude goes a little bit sideways this morning. I would not be surprised to see a little bit of a reaction either off of this support here or this support way back there, which is essentially the same thing. Crude does tend to go a little bit sideways on inventory day. Here's crude oil now on the Falcon swing trader. Let me turn off the stop strategies. Oh, by the way, these blue dots that you see on here, these are the stop strategies from the Trade Manager, perhaps the most important trading tool you can ever get your hands on. The Trade Manager does two very important things for you. First, it restricts your risk exposure. It never allows you to risk more than you can afford to lose. And you have 16 different stop strategies to choose from here, each one fully customizable so that you can incorporate a stop strategy. So if we were live in this trade, the Trade Manager would always automatically manage your trade according to these blue dots. So wherever that blue dot is at, that's where your stop would be at. And these lines that you see on here, this is another add-on. This is something that you can use on any chart, whether it be a time chart or a tick chart or whatever. This is the ultimate support and resistance suite. And no, they are not pivot points. No, they are not Fibonacci levels. These are true support and resistance lines. And the market seems to be sticking around them pretty much today, at least in crude oil. And again, that's not unusual. This gold line is our median line. This is our primary support. This first blue line, primary resistance. It looks like we're just about to take a little bit of a bounce off of the secondary support. The swing trader did not give us a sell signal. We got spoiled by this green bar or the green trend line. Well, I suppose you could see it as an early trend change signal. The early trend change signal develops just as the trend line changes over. And the tip-off is always this test of the extreme, this little bit of a lower high in this case. Honestly, I probably would have let that one go, and I'm reasonably sure we would have had a comparable signal in the Hawk scalper. Let me bring that over here now. So here's the Hawk micro scalper. Actually, it looks like the Eagle was giving the best signal this morning. You see all these yellow bars through here. The Hawk will always tell you earliest when a market is in chop. So all these yellow bars clustering like this, if I roll this back like this would look very much like a market that is in chop. Here was the open. We had a green bar sell just before it, but I don't think I would have risked anything on that. Well, I don't know. Again, the market is just looking too congested right now. What I tend to do when the market is congested, because people always ask, Eric, how do you trade a sideways market? How do you trade a choppy market? Because the market's choppy so often, right? People want to know, how do you trade it? Well, the best way to trade it is to let it get outside of the chop, at which time it will retest, and if it's truly committed to heading lower, it will generate another signal. So we're looking for this, what I refer to as a test and a retest, and we will generate a signal. If the market fades now and goes way back into this trading range, well then it's not truly made a breakout. All right, so part of the problem with trading choppy markets is just being able to identify that the market is in chop. So crude definitely bearish today. We will get an opportunity to enter there, I'm sure. Okay, it doesn't look like we're missing too much on the NQ this morning, so let's take a look at the 30-year bond. Here is the 30-year bond on the Hawk microscalper. Ooh, good overnight session. First micro-macro cross signal right here. Very, very high probability signal. We did get a green bar sell just off of the London Open. Sometimes, this is about midnight my time, sometimes I will watch these things. So here's our complete signal. Sometimes I'll watch these things before I go to bed, and I tell you, a few minutes later, when the market falls, I sleep so much better. I could have left a stop strategy in play. I could have just taken this as a runner and let the stop manage my trade, in which case I would have been stopped out down here. Looks like for another $200 or $300 profit. It's always fun waking up in the morning to a nice profit. The market did come back with our first micro-macro cross signal, high probability signal. It looks like right here we're generating a macro pullback signal. So all these things are actually pressuring the market to go a little bit higher, the stock index market, because bonds and the stock indices do tend to have an inverse relationship most of the time. So we'll see. Okay, here is the bond market now on the Falcon Swing Trader. Not so easy to catch the trend change off of the London Open as we just saw on the Hawk. But again, that's why we have three tools, right? Because the Hawk saw that this opening here in the London Open was actually a scalping environment. I picked up the scalp signal. You see we got a nice bounce here off of the primary resistance. Fell through the primary support, came back, retested it. Here is our trend change signal. Also, what we call a late filter entry signal. These signals here, folks, on your Falcon Swing Trader, very, very powerful signal. This is a signal that I'll take almost without exception. It's as good as money in the bank. When your filter goes out of sync, your trend line does not, and then you generate your sell signal. Everything comes back into sync. Very, very powerful signal. So here at the moment, struggling a little bit. Our trend line has changed. It's changed back. Again, starting to go a little bit sideways. Maybe a little bit bullish, but it's too early to tell. So that's the Falcon. And let's take a look now at the Eagle. Okay, don't know know why that's printed there, but at any rate, let's take a look here at the Eagle. Oh, the Eagle picked up the London Open signal. So out of all this choppiness here, we did generate a signal off of the hard edge, a with trend signal. Very good decline there. Here was our soft edge bounce. That one, quite honestly, would have been a little trickier to take. Let me show you why. Not that it wouldn't work out, not that it's not a viable signal, but I would have probably at this stage drawn a trend line something like this. Oops. Yeah, probably would have drawn a trend line something like that. And then we get a signal printing near the bottom of the trend line, of this channel, I mean. Yeah, again, it's not to say it's not a valid signal, it's just I would rather short it from up here. But it did head lower. Ooh, it actually overshot the trend line. This could be getting a little bit bullish now on the 30-year bond, which sort of confirms what we were just seeing there on the Falcon, that it was perhaps turning a wee bit bullish. We'll see. These trendline overshoots, if you don't realize it, these trendline overshoots are actually bullish if it occurs to the downside and bearish if it occurs to the upside. So if you're watching the 30-year bond, we might see a short-term rally. Okay, here's the NQ, still very, very sideways. Once again, you can see all these yellow bar clusters telling me that the market is sideways. Our filter broken up very badly. Our trend line looking like a roller coaster. So essentially, now that I know it's range bound, the thing to do is avoid it until it gets outside of this range. I know, doesn't sound like much fun, but it's more fun than losing money. Here was the first micro-macro cross to the upside. Was that enough to get to our profit objective? Oh, it did too. See the scalper. Get up there, hit our high probability profit target, and what happens next? The market starts reversing. This happens a lot. You would be amazed how often we hit our high probability profit target only to watch the market turn. Here was our first micro-macro cross to the downside. Now the first micro-macro cross on the hawk, again, very powerful signal, very, very high success rate. Another one of these signals that'll take almost without exception. It occurs when the micro line crosses the macro line and everything comes into sync. So we've got red trend lines, red bars, red filter, red signal, and it's a signal that you can take with a great deal of confidence. Here too, we just hit our high probability profit objective, and then the market starts to go the other way. So in spite of the choppiness, we did get two signals this morning. It's looking like the hawk scalper might be the best tool. If we don't get something printing here pretty quick, what I'll do is I'll take a signal just so you can see how the NinjaTrader manages your, or pardon me, the trade manager manages your trade. Let's see what else we got going on. Soybeans. If you guys aren't soybean traders, it is a market you might want to check out. Here's soybeans on the falcon. Your trading friends might wrinkle their nose at you, but it's their loss, because look at soybeans. It tends to sometimes waffle a little bit, but once it picks a direction, watch out. So soybeans especially active yesterday, as were most of the grain markets. So let's roll back here to the open. Oh wow, it was just a crazy day. Was it it must have been a plantings report or something. Okay, so beans open right about here. This is my time, 6:30 my time. And you can see the overnight a little bit quiet. They generated a little bit of a sideways channel, but here, right out of the open, they generate a trend change signal. Now, the trend change signal occurs when your trend line changes color, and it's the first signal that comes in sync. So we have green bars, green warning dots, green triangles, green filter. This is our trend change signal. And soybeans, again, one of these markets, because it's a little bit more active, has a little bit more follow through, I tend to double my profit objective. And you can see the market brings you in. Oh, I guess you took a little bit of heat there, but for the most part, once it committed to a direction, it never looked back. So lots of opportunity there. And that's just one of the moves. You can see that for the rest of the session, soybean, well, a little bit of a retracement there. Also a trend change signal to the downside. Look at that. A lot of times when, oh, actually, I guess that was a decent signal. When you see this big rally like this, and it doesn't matter what market you're in, if you get a big rally like this, sometimes the market enters a bit of a retracement phase. And people get excited because you may generate a trend change signal right about here, and then they short it, and then the market resumes with trend. And I'll inevitably get the email that says, well, Eric, why did this trade here not have the follow through? Actually, what happens is the signal tends to generate a little bit deeper like that. And what this person has done is they've totally ignored the trend prior, right? The market does not turn on a dime. Compare this type of move, this type of pullback, which really is just turning out to be a bull flag before the market heads higher. Compare that kind of move with what we see here, where the market is trying to go higher, it can't. Tries to go lower, it can't. Tries to go higher, it can't. Tries to go lower, oh, we're starting to breach. This is what traders refer to as distribution. And it's markedly different from a pullback, because a pullback tends to have this steepness to it. And when it comes out of that steepness, you expect the market to rally. When the market tends to go sideways like this, and then you generate your trend change signal as we did here, you can have a little bit more confidence shorting that. And actually that was a very fast decline. And then the market started the whole process over again with a trend change signal now to the upside. All right, so just a little something to keep in mind when you're in a market, it rallies very, very strong, and all of a sudden you generate a counter trend signal, or what would be perceived to be a counter trend signal. This is one way you can judge the validity of the signal, is by the steepness of the pullback. If it's shallow, the breakout is likely to carry some strength with it, because we're having this conflict between the buyers and sellers. If it's steeper, it's probably just a short-term pause, because this steepness is very often caused by profit taking, where traders are saying, okay, I've got enough, and they pull out profit, the market tumbles a little bit, and then the people who missed the move from down here all of a sudden say, oh, we got another chance to get in, and then they start buying. This is where fib traders get all excited because they think the market is retracing to some mysterious level. And I'm not knocking fib traders. One of my friends is a fib trader. But the market is retracing because of profit taking, not because it needs to go back to the 50% level or the 62% level or whatever. Fib trading, like Elliott waves, like so much trading related stuff, is much easier to do in hindsight. That's why we took great pains to develop these tools that you could use them real time. Imagine that. So right now, soybeans still also very sideways, a little bit of a downward bias. Notice this phase here compared to this. Right? It's got that pullback flavor to it. Here was an early trend change signal that you could have tried your hand at. At the very least, it looks like you would have been able to get your trade to break even. But if this amasses now to a larger sideways consolidation, then we may have lost the trend, or when it does break out, then we can anticipate that it will have more to it. Okay, but right now, at this point in the game, soybeans a slightly more bearish flavor, at least according to the hawk, or pardon me, the falcon swing trader. And since there's still nothing going on at the NQ, let's take a look here at the soybean market on the Eagle. And our band slightly bearish. We did generate a buy signal here, but it was against the band. We're looking now for sell signals because our band is bearish. I suppose we did have a green bar sell back here. Notice the green bars, the red dot, red triangle, and hash mark. The band oh so neutral. We should see a move come out of here though. You could identify this, I suppose, as a slightly larger trading range. That would look something like that. Good news is we have tested the extreme. The test of the extreme is what we call it when the market tests the highs or the lows, as the case may be, and then fails. There's a good chance it's going to go the other way. If you recognize no other pattern, learn to recognize this test of the extreme and the failure, which is stopping its failure part. All right, so soybeans relatively content where they are at the moment. You're not going to see traders commit to a whole lot of stuff going into a holiday, especially in a crop market like soybeans in the summer over a 3-day break. No, ain't going to happen. Hold on a second here. Jack is saying is my data feed off? Hold on a second here, folks. The NQ 43, 44, 35 half. No, my data, no, I've got the right data turned on. For a second there, I thought I was on delayed data. No, I've got the live connection going. Jack says your data is off. I don't think so. And somebody please correct me if I'm displaying the wrong data. Yeah, no, David says it's good. All right. Yeah, okay, good. No, I think, Jack, there might be something wrong. This is today's data. This is live. Jake is saying, how about the DAX or the 6E? Why not? Because we're still in between signals here. So let's throw the DAX on here, and I'll throw the 6E on my other chart, and we'll see what gives with those. All right, so we're just waiting for the DAX to finish loading. The 6E is still loading. Jack says the indicators look accurate to profit from. Well, we've tried very hard to streamline them, and what we're looking at is, I'll show you here on the DAX in a second. We're not looking to take every single signal. In fact, we try to concentrate on the higher probability signals. And what might those be, you ask? Those would be things like this. This is what we refer to as our cheat sheet. This is the cheat sheet for the hawk. And you know, each of the tools will have its own high probability signals, but here's the hawk. So we're going to look at things like the first micro-macro cross. We're going to look at the macro pullback, the 4-arrow consolidation, the post 4-arrow consolidation, and the red bar buy or the green bar sell, which is actually can also be our counter trend signal. So we're not looking, you'll see there's a lot of warning dots and triangles here that I did not consider taking because it did not match one of our high probability signals. And that's going to be the case for all the tools. Actually, I haven't gone over the Raptor with you yet. Let's take a look at the Raptor here on the DAX. The Raptor, as I mentioned, is a blend of the other three tools. So it incorporates elements of the Hawk, the Falcon, and the Eagle. You can see we borrowed the band here from the Eagle. The whole Eagle Trend Trader has been programmed into the filter here at the bottom. The bar colors, yes, can be changed. Some people don't like the blue and pink. Yes, you can make the bar colors whatever color you want. Here on the Raptor, again, signal generation, exactly the same. We're going to get a warning dot along with an audio alert. Triangle hash mark when the signal is complete, but as with the other tools, we're not interested in taking just any old signal. We're going to be looking for our higher probability signals. All right, well, I was hoping there was a double pullback in there, but there wasn't. Here's one of our high probability signals. This is what we refer to as our trend change signal. Each of the tools generates a very strong first with trend change signal. So when the band flips over and the Raptor produces a signal, everything is in sync. This is a signal that you can take with a great deal of confidence. Oh, I'm looking for a double pullback, but last couple of days, the double pullback has been few and far between. Well, the double pullback is simply a signal. Oh, well, here we go. This is a little better. The double pullback is a double pullback into the hard edge, and then when the market comes out of there, the signal it produces tends to have some follow through. So once we start entering this band, we essentially look for a double pullback to develop. And if we get that, then we can expect a little follow through. Here is a counter trend signal into the band. This would be a soft edge buy, and you can see it had a little bit of a move higher there. It's a signal that occurs as the market encounters the soft edge. It would be a counter trend signal, so in this case, the band is bearish. It's a buy signal. We expect the market to move at least to the hard edge. This is a much more enticing signal when there's a lot of space through here. But the tip-off is the test of the extreme. The failure to recapture the low, the market comes back with a buy signal. That's a signal that very often, I might throw a onesie onto it just to see what happens if there's any follow through. And there certainly would have been enough here to hit our high probability profit target and maybe even pick up a few extra ticks. This tool you see here, this rather fancy looking tool, this is the Geiger counter. This is our latest addition to the DTS family. And once again, you can find out more information about these tools at that link that I just sent you. So the Geiger counter is essentially a tape reader. What we're doing here is we're reading the tape. And this is the DAX, and look at these orders. Nobody came to work. Is it a holiday in Europe today? I don't think so. I think it's just a holiday in Canada, but whatever the case, this is the DAX. This is one of the largest markets in the world, and look at the order flow. We got 9 on the ask and 3 on the bid. Oh, there's 11 on the bid. Oh my gosh. Crazy. You'll see you get this histogram printing on this tape. It does sometimes show you a bias one way or the other. It's got the dial-o-meter, which shows you short-term bias. Around the bar itself, we're not getting it today, but there's sometimes a short-term trend indicator, and you'll get this red or green envelope around the bar. The Geiger counter is a great tool for sometimes entering trades, and it was actually designed to help you determine whether to stay in a position. Oh, see, there's the trade indicator. So we're getting that short-term red envelope. So let's say we were long. Oh, here's a double pullback. I didn't even notice that. So here's a little double pullback signal. It comes out, it generates a buy signal right here. So let's say we were long from this position, and we're getting the red envelope around the bar. This might make us a little bit more aggressive with our stop. If our stop was, say, down here still, we might be thinking, maybe I'll hit my break even button and bring my trade up to break even. And we'll see how that goes, right? So the Geiger counter, a very helpful tool for helping you determine, well, first off, whether you want to get into a position, and then secondly, help you with managing your trade. Well, the DAX is a little bit on the thin side today, I'll say. It's hopping all over the place. Okay, you see the Geiger counter here? We've just got a spike in the buying. Well, let's see if that's going to get isolated. If it's an isolated spike in the buying, that's very often stop running. And we might see a reversal as a result. No, it seems fairly even. Notice the needle on the Geiger counter has gone to green. Thanks, Jim. Jim says the DAX on the time chart is showing a hangman, so we'll see. We'll see if the DAX falters. Jim also good enough to give me the market internals. Thank you. 2,100 buyers on the advanced decline, 700 sellers. So that's actually fairly bullish today, isn't it? That's about 1,400 to the upside. Not too much of a surprise given how quickly the market fell off the last couple of days. All right, so there's the DAX on the Raptor. Let's take a look here on our Eagle, and excuse me here for a second while I see what's going on. Why am I getting that warning? Here we go. Do I have enough data? Yes. All right, so the DAX, European market, of course. I should roll back here to the London Open. Ooh, very busy day for the DAX. I might start have to stay up at night. Wow. Okay, so the London Open somewhere around here. The market tailed off a little bit. We actually generated a sell signal down here. I know this was a sell signal up here. Well, it was a rule of three, so to speak. It would have been delicate to take. We did get the short-term test of the extreme. The rule of three always needs to be preceded by a test of the extreme, which we had. This developed rather quickly. I probably would have held my entry until we got below this low right here. Made sure we violated that, which we did right there. And a very nice decline. But it looks like I'm not going to go through all the different trades here on the DAX because it looks like there was a plethora. There's a word I love to use and can't work into conversation nearly enough. Of opportunities here in the DAX. Look at that incredible rally. All in the first hour of trading, or at least off the London Open. So where we're at right now, a little bit more subdued. We did get a with trend signal right here. Notice that we had the test of the extreme down here, and then it comes back with our buy signal. Would have been a little bit nervous putting some money on that one, just because this market looks a little bit sideways. Probably would have started rolling my stops when this one got down here, started looking a little bit weak, but it did have some follow through to it. Okay, so that's the DAX on the Eagle. Let's see the DAX here on the Hawk Scalper. All right, I'm gonna take a signal here in a moment, just so that you can see how the trade manager rolls your positions, manages your stops. We did have a macro pullback signal here, which was pretty interesting. See if they come back with another macro pullback. We normally only see 2 macro pullbacks within a trend. So what I've done here is I've adjusted the stop strategy. With the trade manager, you're going to see, oh, I can only get in with one anyhow. Well, let's throw it in there, see if we get a rally. The trade manager always protects your position by only allowing you to risk a certain amount. So this is what is appropriate for my account. This is 2% of my account. And you can see at this stage, it's allowing me 2 contracts. So what I'm going to do is I'm going to actually see if we can get a runner in here. So we're just about to hit the break-even trigger. So the trades now have gone to break-even. I do have my stop strategy enabled. There we go. Now what you should see, well, I should have left it back. Come on, Dex, get up there a little bit. I'm trying to make a point. As these blue dots pass my stop strategy, oh, see how they picked up my stops? And now it's going to roll my stops automatically according to this stop strategy. So I can quite literally leave this trade alone. I can look at other markets. I can, go get a coffee, do whatever. I don't need to worry about this trade. And like I said, there's 16 different stop strategies to choose from here. So pretty decent follow through on this little macro pullback signal that we saw. Come on, get up there. There you go. Come on, don't stop now. So notice we're working on yet another macro pullback signal. This is going to be number 3. Oh, thank goodness the line changed over. Oop, there it is, red again. We don't want that. Get up there. Get up there. Only because, like I say, we normally only see a couple macro pullback signals within a trend. The DAX, of course, because it moves so much, can be a little bit different. Well, there we are. So we got stopped on our remaining position there. And we'll just take a quick look here at the Eagle. Oh, I think we did the Eagle already, the Falcon. And oh, here too, just out of the North American Open, late filter entry signal. Did you catch it? Filter went out of sync, trend line did not. Boom, up she goes. Oh, and another late filter entry signal right here. See, trend line does not change, filter does. Good follow through, right to the resistance line. Notice we found support on the resistance line down here. I know Omar likes to use the, Omar, he's the fellow who trades the Forex markets with the DTS system. He likes to use these support and resistance lines as targets, and he would be very pleased with that. The late filter entry signal, like that macro pullback signal, we usually only see 2 within a trend. As we start to get more and more of those, I get a little bit suspect. Well done, Jim. Let's take a look here at the YM before we go into the 6E. Jim's knocking it out of the park on the YM. He says he just picked up 30 ticks. So here's the mini Dow on the Raptor. Wow, Jim, well done. To pick up 31 ticks on a market like today, that is some pretty awesome trading. So Jim says we might get down here to test the 10 a.m. low. I think you might be right about that. For the most part, though, the market's still very sideways today. Geiger counter is full on into the red zone. All right, we'll come back to the YM. Let's take a look at the 6E, euro. Euro making a fairly steady progression. Here's our trend change on the band. This is on the eagle. Trade forecaster says we're only in swing mode for about another 5 minutes and we're going to enter scalp mode. So expect the euro to start plodding sideways. Yeah, so we got a sell signal here. Decent progression out of that one. Would have been a little nervous selling that. Why? Well, because we hadn't really seen a test of the extreme here yet, right? Turns out this was the test of the extreme, but as it was building, it was hard to tell. But that's why Trade Manager allows us to dial down our risk also, right? So when you see those positions that you're not entirely sure about, you can dial back the risk a little bit. Here is the 6E on the Falcon. We're struggling with the sell signal here. Taking a little bit of heat on it. In fact, it's working itself into a trend change signal to the upside. Trade forecaster did say we were going to enter scalp mode in a couple minutes, and I think it's a little bit ahead of itself. And here on the Hawk Scalper, you can see same thing. We're working into green bars now. All these yellow bars clustering. So nothing very attractive of late here on the euro. Good first micro macro cross right here. Another good first micro macro cross right here. Again, very high probability signals, right? Signals that I'll take almost without exception. Okay, well, let's dial up the NASDAQ again, see if anything new has happened there. Just going through your questions to make sure I haven't missed anyone. David is asking, when you trade the NQ, how many points do you try to capture? Well, it depends a little bit on the tool, David. We do have high probability targets for each of the birds. With the Hawk, we're looking at $50 per contract. With the Falcon, we're looking at $100 per contract. Same for the Raptor. And with the Eagle, we're looking at $200 per contract. So when the Eagle signal produces, we're expecting at least a $200 move. And then very often when we get that $200 move, the market will change direction. So here was a signal here. Let's say we took it like that. Oh, that one actually had more follow through to it. But you'll be surprised how many times we'll hit our profit target. The market might get a little bit higher and then all of a sudden stall or change direction entirely. And here we are stuck sideways. Well, yes, David says, how many points is that? Well, you need to change the points for the instrument you're trading, right? So the NASDAQ at $5 a tick on the Hawk would be a 10 tick move, right? 10 ticks times $5 is $50. 20 ticks on the Falcon and Raptor, and 40 ticks on the Eagle. And like I say, these are high probability targets, and if you think you can't make money trading for $50 a tick or $50 a contract, you can. You can make a lot of money. Folks, making money in trading is not about taking more signals. It's about having a high quality signal, a high probability signal that you can go in with size. That is how you will make money trading. A lot of people get confused because, well, hey, in the non-trading world, the more you do, the more you earn. But that's not the case in the trading world. In the trading world, you want to have a high probability signal that you can take with a great deal of confidence and maximize your position. So let's say right here we're getting a macro pullback signal or a first micro macro cross, and let's say we choose to set it up like this. The market goes down. Oh, it actually just came short of our, oh, it did. So we probably hit our break-even trigger here. Look at that. They came one tick short of our profit target. Like I say, very high probability signal. That is rare that it doesn't follow through. Okay, let's say we take the first micro macro cross here. Take it to the upside. Let's say we're going to cover it here. The market goes up, hits our target. But look at the size we took. We took it with 3 contracts. We didn't just go in with a onesie. Right? We didn't just go in for $50. Now, if your account is small, of course, you won't have a choice but to go in with a onesie. But your goal should be to grow your account to the point where you can take more positions. Because, and some of you will have heard this illustration before, but if you can take 2 trades a day and make $50 a trade, in other words, you're looking to make $100. So that would be 2 trades on the Hawk, 1 trade on the Falcon or Raptor, and, well, a half a trade on the Eagle. If you can do that just once a day, if you trade 25 contracts, you will make $500,000 a year. Now, I know you're saying, oh, well, that's great, Eric, but I can't afford to trade 25 contracts. All right. What if your account allowed you to trade 5 contracts? That's still $100,000 a year. What if you could only trade 3 contracts? That's $60,000 a year. Starting to get a little bit more realistic. How about 2 contracts? That's an extra $40,000 a year on 1 trade or 2 trades if you're taking your Hawk. That's not worrying about, oh, should I take this signal here? I'm printing an arrow. Should I take that signal? Should I take this signal? Should I take this signal? Should I take this signal? No, that's not it. We're waiting for our high probability signal so I can go in with my 3 contracts. I only need to do that twice a day. This is how you make money trading. And look at all these yellow bars. I don't want to trade any of this. This is a mess. Oh, I should hurry, and we'll bring over crude oil because we're just coming into the inventory report. Now, crude does not have a very well-defined range going into the report. A lot of times if it has a well-defined range and the market is trading right around the middle of the range, I'll use our OCO order and I'll place a buy or a sell. But I think what we'll do this time is we'll let the market engage or let the report hit the floor. This is what a trading friend of mine likes to do. He says he lets it hit the floor, let the dust settle, and then he'll bracket the range. So there's not much else going on. We might as well take a look at crude. And now Czech has made me paranoid. Am I in the, I think August is still the month that we're watching for crude. Yes. But those are the kinds of things that are going to make you the money, folks. It's not chasing around every single signal. And again, some of you will have heard this illustration. I had a fellow come to me for coaching, for mentoring, and he said, I want to be a scalper. I want you to show me how to take 100 trades a day. And I said to him, well, you'll never be a successful trader taking 100 trades a day. And he never came back. I wasn't real surprised. But, you know, he had that mindset. He had the mindset where I've got to do more. He was thinking, well, that's how they make money on the floor, right? They trade the ARB, what they call the ARB, which is they're skimming points, essentially, is the layman's version. They're trying to pick up a quarter point, or actually what they refer to as teenies, a 16th of a point. We can't do that trading from home, but that's how they do it on the floor when they're trading stocks. All right, so here we've got a little bit of a range. The crude market very, very quiet. Oh, what I'm going to do is I'm going to use the OCO. So let me use the OCO order. I'm going to throw in a sell order below the support. We'll put a buy order just above the primary support line. And we'll see now whether we get a breakout. Don't follow me in on this trade today, folks. The market is too quiet. This is one of the luxuries of being in a trading room, is I can show you something like this. A lot of times the Falcon will give us a signal regardless of whether there's a report pending or not. Okay, we're working on a trend change signal to the downside now, so I suspect we're going to get filled to the downside. Oh, why did you do that? All right, let's try that again. I'm going to have to, I don't know exactly what happened there. All right, so we're short. Notice again, the trade manager managing my stops according to my stop strategy. And while we're waiting for that, Josh is asking, is there a way to only show the high probability trades, like an add-on or a setting? It's honestly, Josh, it's not that difficult to spot. I know it looks confusing now because it's new to your eye. You see a lot of dots and hash marks and arrows and stuff. But really, what we're looking for is we're just looking for things like, and we always get the audio alert. But you know, if you're watching your Falcon and you see the trend line change color, right away you should become more alert to the possibility of a trend change. So the trend line goes from from red to green, and now we're looking for a signal to develop. All right, so the market goes up, it comes down. We ignore the red sell signal because we have a green trend line, and then comes back with a green buy signal, and oh, look at this. Our trend line, our filter, also went out of sync and has come back into sync. This is a late filter entry signal. This is one of our high probability signals. So here's a high probability signal that you can take with a great deal of confidence. And that's the Falcon. There's really only about 3 or 4 signals that you need to learn for the Falcon. There's 5 signals in all for the Hawk, and I think another 3 or 4 signals on the Eagle. So less than about a dozen signals. you need to learn to recognize. And none of them are especially difficult. Like with the, here, I'm going to park this just for a second. We'll let that simmer. But, you know, again, here on the hawk, first micro macro cross. I bet you guys can pick these out already. Micro line, that's the thin one, crosses the macro line. Everything is in sync. First micro macro cross, right? Not difficult to spot. A macro pullback signal. It's been a real mess here today. Macro pullback signal, the dead giveaway, it's a little bit difficult to see here, but the dead giveaway is that the micro line goes out of sync. Can you see how the micro line is green? Everything else is red? That's a macro pullback signal. 4 arrow consolidation, 1, 2, 3, fourth arrow, we would sell, regardless of the bar color. It's the only signal I will take regardless of the bar color. Right? Those are all high probability signals. Here's a green bar sell. This one, not so much a high probability signal. Sometimes I will use it simply as an early warning that there might be a trend change failure. Sometimes I'll even set up to buy it, to buy the failure. But right now, it looks, you know, like everything is holding. Here's a green bar sell. So go ahead, set it up. Maybe dial down the risk amount if you're not sure about it. And there we go. All right, so the signal's really not that difficult to learn to spot. And there's already a huge amount of programming that's going on behind the scenes here. Let's bring back our crude oil trade. So we hit our break-even trigger. We're now, the stops are at break-even. Oh, they slipped us a tick on the entry too. The Falcon, once again, we've actually hit our high probability target, but I'm trying to sneak a little bit more out of it because it is crude. I'm trying to double my profit objective, but we're already there. We've hit our high probability target. If I was smart, I'd probably just hit the close button, but you can ask my wife. She's never accused me of being smart. Yeah, like Jim says, less regarding the comments I was making about trading. He says less is more. You will blow out your account doing too many trades in a day. And when folks come to me for coaching or mentoring, almost without exception, their number one problem is that they overtrade. Jesus is asking about the tools that you buy. If you buy the Raptor, it comes with the Eagle or the others or just the Raptor. Adam is the fellow who will handle the particulars. Adam is the owner. I'm going to shoot you Adam's email address because he's the fellow that you should talk to. I believe he will still do bundles for you, but the Raptor is a standalone tool. Right, the Geiger counter is an add-on. This here is what we call the Trailblazer. The difference between the Trailblazer and the Trade Manager is the Trailblazer does not have the risk portion built in. So you need to be able to approximate what your risk exposure will be. The nice thing about the Raptor is that it's essentially a one-click system. So I'm just going to demonstrate here. There isn't a signal, so please don't get excited. But let's say we choose to sell. So you notice I just hit the sell market button. I automatically have a stop in. I have my profit targets based on where I've set my profit objectives. I have you know, break-even triggers. I've got 2 positions going. So I can preset everything here, and then simply by clicking one click, I put on the whole trade. So there was a lot of interest in that. People, some people, I never found this an issue, but some people said, oh, well, you know, I gotta click at least 3 times to put a trade on. And some people found that too difficult. So the Trailblazer, a little bit of a stripped down version of that. and it allows you to get into a trade just with a single click. All right, so there's the difference between the Trailblazer and the Trade Manager. The biggest difference is that risk portion and the way that you enter the trade. But you can do all these other tools on your whatever instrument you have. So that means you can put the support and resistance lines on here. You can put the trade forecaster. You can put whatever you want on your Raptor. The DTS tools are normally sold as a bundle where you get the Hawk Scalper, Falcon Swing Trader, Eagle Trend Trader all together. Remember, the notion is that you're looking at the market from 3 different points of view. You'll notice that while today has been fairly much sideways, and the trade forecaster right now is saying we've only got a couple minutes before we're going to enter scalp mode. Well, yeah, I thought we were in scalp mode all morning. But Adam is the fellow who can help you out with that. Bob's asking, can you take a look at the E-mini on the support and resistance lines this morning? Absolutely, Bob. Let me just load that. Jesus is asking about the trading room, if it's every day. It's open every day for DTS owners, and he says, is it different than today? Well, I was hoping that today we would actually have something more tradable, because people say, well, can you show me some trades? I know that's why you're all here, but I don't want to take a trade if there isn't a trade. So I guess what I'm getting at in my roundabout fashion is the DTS owner trading room has 2 purposes. One purpose to help alert you to what I consider to be high probability trades. The second purpose is to teach you how to use the tools. So to that end, sometimes we will miss a good signal because I'll be explaining something. And why do I do that? Why is it not just a full-on trade room? Well, as one of the owners said, heaven forbid, Eric, you get hit by a bus, but I want to know how to use the tools. And that's the whole purpose of the room. In fact, a lot of owners who are very proficient with their tools come to the room just for the camaraderie, right? Because trading can be a little bit lonely, a little bit boring. So again, the purpose of the room twofold. The room is on a 2-week break right now. It's going to resume July 13. Just taking a few days off. All right, we got the E-mini loaded, and Bob says, can we look at the E-mini on the support and resistance suite? Absolutely, Bob. There you go. So we just recently took a bounce here off of the primary resistance line. That's the one above our median line. And we've been more or less sandwiched between the resistance zones to the top side. We did get a little breakout here. Notice it did not manage to make the next line. Came back down and has been confined to the resistance zones for most of the overnight. Broke down, took a little bit of a hop off of the primary resistance. I'll tell you one thing, if it breaks the primary resistance line here, it will have a tendency to move 2 zones. So there's a very good chance if it breaks the primary resistance that we could see it end up down here, somewhere around 2056, 57. For the most part, though, well, they haven't really been doing much. I was going to say the buyers have been holding their own, but not really. They tick up a little, they tick down. David is asking, what does it take to get into the trading room? The trading room is for DTS owners. Wednesday, we open up the room to the public so that people can see what we're about, what we do. Like I said, today I've kind of been going over some of the tools and some of the features because there hasn't been that much to talk about. Crude oil hit our profit target. Hooray! So we had the trend change signal right here. So even though it was inventory, the tool still generated the signal, and it does this time and again. So Josh, I think, was asking about high probability signals. There's a high probability signal for you right there, Josh. And again, those are things that we focus on in the room, right? I tried to show you the high probability signals, teach you to recognize them. I'm just checking your questions, making sure I haven't missed anyone. If I have, please feel free to. Repost it. Mark posts a good comment here. He says, my experience with the room has been the repetition of seeing the high probability trades presented over and over. You will get off to a fast start and be identifying them on your own in short order. You can make a living on the high probability signals by themselves. And Mark is going to be one of our poster children. Yes, Mark is a very dedicated individual. And honestly, I'm not going to blow him up too much because then he's going to have to go buy a new hat. But he's doing things the right way, I think. You know, he's learning to use the tools. He's position sizing correctly. He's not getting, overly ambitious with his trading. So many times people jump into trading with both feet and then they wonder why they blow up their account. You can have a whole lot of staying power in a trade if you don't overextend yourself on a position. Okay, here the E-mini. While we were looking at the E-mini, we just got a trend change signal. Now this one I'm going to give a little bit of room. It was against the ATR. The ATR just flipped over. And I have my wrong profit objective for the E-mini, but I can always change that. The triangles and hash marks, well, the triangle shows you a complete signal. The hash mark is only a suggested entry. You can see I'm looking to enter below the lowest low. Because it is the eagle, I'm expecting a little bit more of a move if in fact it triggers. So we'll see what comes of that. Bob says, can you set the alerts so I'm not glued to the screen and I can be doing other stuff? Absolutely. You can set audio alerts. You can set pop-up alerts, and you can even set email alerts. So if you want to email yourself on your phone or something. Come on, E-mini. Come on, sellers. There we go. There we go. Now my high probability target for the Eagle is $200. As you can see, I've extended my profit objective only because I had the wrong setting. There we go. And maybe I'll move my break even to right about there. I usually like my break even about 3/4 to 80% of my profit objective. I figure if the market gets that low and then turns, then it's probably a good idea to get out of the trade. Now I'm just letting the stop strategy manage my position for me. Like I said, these are all customizable. If I wanted to dial it back a little bit, I could do that. Yeah, Bob says, so that means I can watch several markets at the same time. Absolutely, Bob. That's the whole point of having the audio alerts, is that you can watch 3 or 4 markets, and like you said, without having to be glued to your screen like some part cyborg. Here's some pearls of wisdom from Mark, and these are all things that everybody can do to improve your trading. You want to improve your trader starting today? Here's a few things you can do. Mark says, the trade journal, taking fewer but high probability trades, and the trade manager risk tool are all things that help me turn the corner to profitability. Something, like I said, everybody can do. Concentrate on your high probability signals. Never risk more than you can afford to lose. Like, this trade might go sideways on me, it might stop me out, but there's a little bit of comfort in knowing that I'm not overextended. For my account, I can afford the $200 hit. It's not going to cripple me. There's a lot of people who risk far too much trading capital. When I first started, some of you will have heard this story too, is this is going way back. This is like 20 some odd years ago, when you could trade with a $2,500 account. My very first position was in corn, and I had either $1,200 or $1,500 at risk on a $2,500 account. So my trade was pretty much a crapshoot. If it worked, it worked. If it didn't, well, I was hooped. But here, even if I take the $200 hit, yes, it's unpleasant, but it's not going to ruin me. See, professional traders know that you can take as many as 10 losing trades in a row. So if you're routinely risking between, say, 7 and 10% of your trading capital, which if you paid attention to what you're doing, chances are you may be doing just that. Well, if you hit a string of losers, you're going to wipe yourself out. Just like you can hit a string of winners, you can hit a string of losers. And I like Mark's comment about the trading journal. You know, folks, everybody is so resistant to keeping a trading journal. There's nothing to it, and it will make a world of difference to your trading. I much prefer that you keep a written journal. And you'll develop your own shorthand. I'll give you the screenshot of my journal from a few years back. You know, it's as simple as this, just keeping a list of your profit and your losses, why you took the trade, when you took the trade. This was done during one of the profit runs. You'll see there's quite a few trades on here because the purpose of the profit run was to, well, try to run up a sizable profit. Your daily journal might not be quite that active. But the important thing is to not only write down the nuts and bolts of the trade, where you entered, where you exited, whether you made money or lost money, but the reasons behind the trade. And if the trade didn't work out, or even if it did work out, what did you learn? What did you learn about the trade? What could you have done better next time? All right, the E-mini waffling here. The sellers had better jump on these guys pretty quick, or they're going to push to our stop. You see, we had the breakout. We had the breakout. We had the retest. This should have had more follow through to it. The fact that they've stalled and they're heading a little bit higher is a little bit problematic. I'm waiting for the sellers to show themselves, and once I know where the sellers are at, I can become more aggressive with my stop. In fact, I'll get my more aggressive stop strategy ready. I'll go with, say, the bar high low. And you can see from the preview, that's where the bar high low is going to fall, but I'm not going to engage it just yet. Oh, come on, sellers. Where are you? Bob is asking, when you're using the support and resistance lines on the E-mini, can you set stops closer due to the support and resistance? Yes, I know that's how Omar likes to do it. So, for instance, he will use these lines to cover his trades. He'll use them also as profit objectives. Very important point, though, is that a tight stop does not necessarily reduce your risk. Now, here we're going to park this over here for a moment so I can illustrate. This, again, a very important concept, and there's several ways that you can trade. All right, there's no one way that is 100% correct. Actually, let's use this example back here. Okay, so if we're going to risk a certain portion of our account, currently I have it set at 2%. If you're trading a really big account, you can obviously dial that down some. If you're trading a smaller account, you're going to have to dial up your risk percent so that you can actually afford some markets to trade. Markets like the mini Dow and the NASDAQ at only $5 a tick give you a lot of flexibility on your trades, and they're not going to do anything that the E-mini isn't doing, right? So it's not like the NASDAQ is going to, well, I was going to say it's not like the NASDAQ is going to rally and the E-mini is going to fall off. We have seen a little bit of that, but nothing too terribly serious. Anyways, my point is this. We're going to risk a certain percentage of our trading capital. So what does that mean? Well, that means I don't have to strangle my trade. I don't have to keep my stops really, really tight. Notice 2% of my account is $420. Now, don't fall off your chair if that's a big amount to you. This is 2% of my account. You know, yours might be more, yours might be less. But look at what happens if I run my stop way up here. Oh, my risk is still about 400 bucks. But which trade has the higher probability of success? We're talking probability now. This trade here or this trade up here? Well, naturally, this trade up here has the higher probability of success. Right? If I took this trade here, this one with the yellow line, market brings me in, it bounces, it stops me out, I've just taken a $400 hit. But if I had my stop up here, well, I'm still in the trade, aren't I? And rather than have a $400 hit, I actually make a $100 profit. So the problem that most people do is they think, oh, I'm going to be a very conservative trader. I'm only going to trade, say, 3 contracts, and I'm going to run my stops really, really tight. Notice we also have manual mode here, which will default to whatever quantity I have there. So they're going to set up their trade like this, and they're going to say, oh, I'm going to make my stops really tight. This way, if I lose, I only lose $150. Okay. But if you're going to, the problem with doing this is if you lose, okay, you only lose $150, but you've only made $150. Whereas if you're going to structure your trade that way, if I lose $440, but if I win, I make $400. Notice the difference. If I'm going to structure the trade this way, look at the quantity. I'm taking 8 contracts instead of 3. If you think this trade will work this way, why would you only take 3 contracts? Why would you not optimize your position and take 8? But then people say, oh, well, okay, my stops are too tight, so I'm going to risk it way up here. Well, now look at what happens. You're still trading 3 contracts, but now you're risking $500 in change when you can only afford to lose $400. So if this trade goes south, okay, you've taken a hit, but you've lost more than you can afford. This is how people wipe themselves out. They'll go out and they'll start the day and they'll take their three contracts, and let's say they take a hit and they lose, oh, I don't know, let's say they lose $250 on the first trade. So now they're down $250. And so they take the next signal. Let's say they lose, I don't know, let's say they lose another $200 on that trade, and they say, oh, nuts, I've lost another 200, I'm 450 in the hole. I'd better dial down my my exposure, so I'm only going to take 1 contract. Well, guess what? That next contract wins, and let's say they make $150 or $200. Well, you've done the exact opposite of what you're supposed to do. You've maximized your losers and you've minimized your winners. So you've incurred more loss than you've earned. Right? And you've probably incurred a loss because you set your trade up too tight. You jammed your stops in really tight, thinking that you're going to control your risk, but all you're really doing is strangling your trade. You're not even giving your trade a chance. Whereas if you had limited your risk to a percentage of your account, you can risk it way up here because your risk amount doesn't change. Yes, I'm risking more, but this is not an amount I cannot afford, right? So whereas you would have been stopped out on your $150 trade right there, I actually hold in until I realize a profit. A very, very important concept, and I won't get into it too much today because I know I get up on that soapbox and I sound like a country preacher, but it's a very important concept to wrap your head around, that you have to control your risk exposure. Anything else is you're just going to end up losing money. Death by 1,000 paper cuts. You'll bleed your account until there's nothing left. And Peter says, yeah, the support and resistance lines show support at 2065. Yes, they do. If they continue to break down here, which I suspect they might, we could see them fall all the way here to 2057. Certainly 2061, very feasible target. The market's moving very, very slowly today. 2057 might be too ambitious. All right, you guys, I think that's going to be it for today. If anybody has any other questions, Mohammed is asking about the DAX. We looked at the DAX a little earlier, but I will throw it back up here for you. Mohammed is asking, does the indicator work as good as other markets? Yes. You know what, folks? Any chart that you can put on NinjaTrader, you will be able to generate high probability signals. I don't care if you're trading the Forex markets. Mike Filigari uses DTS to trade the stock markets. So he's trading Apple and Google and who knows what else. I prefer the futures markets and the stock indices. But regardless, whatever market you can plot, you will be able to generate a high probability signal. So we're waiting for the Raptor to load. We already took an earlier trade here on the DAX. Wow, the DAX has been very active. So just a real quick run through, because the DAX is getting near the end of the day, but even just a few signals this morning. Oops, sorry. Here's a first, oh, doggone it, wrong tool. Here's a first micro macro cross. Here's a macro pullback signal. Here's a first micro macro cross to the downside. Here's a macro pullback signal that you took a little bit of heat on, but it eventually fell to its profit target. Here's a first micro macro cross. Like, look at this with the DAX. You're just as fast, just about as you can get the orders on. Oh, well, something happened through here. I can tell from the time bar. This probably unfolded too quickly to take some of these signals. But here's a macro pullback you would have been able to take. Oops, wrong tool again. Here's a macro pullback. Here's another macro pullback. Here's a green bar sell. Looks like the way these were unfolding, these would all be tradable signals. Here's another macro pullback. All right, so lots and lots of signals here on the DAX this morning. Currently, we're printing yellow bars telling us the market is perhaps moving sideways. So we're entering a little bit of a choppy phase. Here is the Falcon now on the DAX. Nice trend change signal right here. Looks like you would have been able to take that. Notice our trend line flip-flopping. Notice our filter changing. So nothing tradable here at the moment. An early trend change signal to the upside, but I might wait for the proper trend change signal to develop. Here's the Eagle now on the DAX. So let's see, the North American Open, well, way down here. So we got a red bar buy, good follow through there, came back with a trend change signal here. Would have been a little bit anxious about taking this one here because we did not really have a test of the extreme. As it turns out, that was it right there. And the market tailed off nicely from there. Soft edge sell. That one, again, would have been a little bit more iffy to take because let's just see how the trend line is falling. Yeah, see, that signal would have developed near the bottom end of this trading channel that I drew. And that would make me a little bit leery about taking it, but it did have some follow through to it. And last but not least, let's take a look at the Raptor. for the DAX. And well, it was waffling quite a bit through here. The Raptor isn't going to produce as many signals as the other tools. The Raptor is a hybrid of the other three birds blended into one. Excuse me. So it's very much like a hybrid car, right? You got your Toyota Prius, you have your Corvette. Both will get you from A to B. Both are not the same car, right? The Prius, obviously, because it's a hybrid, incorporates more elements than the Corvette, which is built solely for speed. All right, I'm trying to find you a decent signal here. Here's a trend change signal on the DAX right here. Also happened to be a double pullback, but that would have been a little bit tricky to see, easier to see in hindsight. Real time, I would have been focusing on the trend change signal, which is that one right there. A lot of choppiness in the DAX too. See all these yellow bars? It borrows that, the Raptor borrows that from the Hawk. So it tells you when the market is sideways, when it's choppy, when it's best avoided. And now we're looking at possibly a trend change to the upside. We'll see. The band is still bearish. I wouldn't get too excited about buying it just at the moment. All right, you guys, I think we're going to button up the room now. Have yourselves a wonderful Canada Day holiday. Even if you're not Canadian, go ahead, have some maple syrup on me. And for the rest of you, have a great Independence Day holiday. The markets are going to get extremely thin tomorrow afternoon, so caution is in order. If you're trading today, I fully expect the E-mini and the NASDAQ to head a little bit lower, but it might take the rest of the session to do so. That's my guess. Crude oil also still in a decline, although they've started moving quite a bit sideways. All right, you guys, have yourselves a wonderful day. We will be doing this again next Wednesday. If you'd like to join us, we'll talk to you then. Bye for now.